Hi there, it's Bill with Smart Trades, and it's the 27th of July. That would be Tuesday around 12:15 Pacific time. And just an update here on the S&P. I had previously mentioned if the S&P punched through 1118 that I'm probably wrong, and certainly it has given me a pause here, and I think there is a pretty good possibility that the market is indeed going to work higher. But so far, the market actually, after it hit 118 or so, it actually dropped off a bit, and so did the breadth ratios. The wedge pattern is still intact. It's not the kind of pattern that I'd like to see in this situation, in that the momentum's actually not too bad to the upside. That said, it has faltered just below the absolute breaking point to my double zigzag, the way that I have it drawn up to this point. And that X wave comes in around the just over the 1131 area. So so far we're still holding. I wouldn't necessarily be short here, but I still would be alert to the possibility that this thing could keel over, because ultimately, if this scenario, if this pattern is correct, and we are getting ready to enter C of the second leg of a double zigzag, the target's going to be down around the 950 area. So certainly worth watching here, even if I'm wrong and it goes higher. I'll try to update if it does look better. These charts were made a little earlier. I sent them out to my clients, and here is a close-up of that same pattern we just looked at, and you can see the wedge is still intact. We actually hit the top of the wedge and dropped off, and breadth fell off as well, and volume expanded. You can't see it on this chart. I don't have volume on the intraday S&P cash, but indeed on these bars down, volume did increase, and again the breadth ratios fell off pretty well, and right now we're somewhat below somewhat in bearish territory on the breadth ratios, even as I speak. So we may be topping in C of B of that double zigzag, and let's watch it carefully. I'm just going to flip back here. This is a chart I made up earlier. There is resistance at around 1117, denoted by the red R there. That's also near the top of the underside of the wedge pattern channel. So we have since tested that area. We may test it again. If we were to fail around 1117 basis the cash and then fall through the bottom of this pattern, I think that would be bearish. Also, I'd like to see it take out the approximately 1108 area. That's the previous fourth wave support area, if indeed it's going lower. Now here is our ongoing count, basically in the Dow, with the ABC, the first leg of the zigzag down. And again, that parallel channel is just holding. We're just holding below what I had labeled before as the X wave. But in the event that we go through, here's an alternate count. Basically, that this entire leg down, I had previously labeled ABC. We'll label that A. You could still label it as a double zigzag. It's not really important at this point. And that we have an expanding triangle B wave. Now that expanding triangle, as well as some Fibonacci calculations, as well as previous resistance, targets the 10,700 to perhaps 10,800 area basis the Dow. That would also be an A equals C of this particular leg. It's kind of a mess, this particular pattern, but it is what it is, and I think regardless of other possible counts, that 10,700, 10,800 area is going to be an important area to hold if indeed we are going to have another leg down. And here is the S&P cash, and same thing, I've drawn it the other way, where we have a double zigzag and an X wave rather than an ABC. And indeed, you can see here how the relative angles, both up and down, are similar. It does look like a possible expanding triangle. which you can only have in a fourth wave, X wave, or a B wave position. So given that the possibility that some folks are talking about that this is an impulse down, if indeed this counts out best as a triangle, it would basically eliminate the possibility that we have a series of 1-2s or a 5-wave structure to the downside. Resistance here is going to come in around 1147 to about 1155, maybe up to 1160 basis the S&P cash. Again, volume is declining on the way up. And again, finally, there is a possibility we're going to fail to go through. We're still basically at resistance here. There's a whole series of closes right around this, the 1120 area, as well as the previous peak at around 1131. So as long as we don't take out that 1131 and change peak, the possibility that the double zigzag is still in force and that this is a peaking B wave does exist. So I would be alert to that possibility as well. Again, the long-term target is still around 950 basis the S&P, and obviously that's more than 150 points down from here. So in the event we do roll over here, I don't want to miss that because we're assuming the market's going to go up to whatever 1150, 1160 or whatever. And finally, here's the Russell 2000 futures. And you can see here again a pretty nicely defined series of lows connecting and the highs connecting as well. The Russell targeting just over 690 if indeed this is an expanding triangle, B wave or X wave. That's about it for now. Hope you're having a good day, and see you later. Bye-bye.